I was looking at some data the other day and I had to do a double take. Home sales in California are actually lower than they were during the Great Recession. I mean, that's crazy, right? But here's where it gets stranger. Prices haven't crashed. They haven't even come close to collapsing. They're still hovering at record highs. So what's going on here? How does this even make sense? And more importantly, what does this all mean if you're actually planning to do something in 2026, whether if you're planning to buy property or sell your home? So in this video, I'm going to walk through why home sales in California have fallen off a cliff, why the problem isn't what most people think it is, and what's actually happening here in San Diego, what the numbers are, how mortgage rates are affecting home sales. And when you look at the data in January and February of this year, there's a story here that a lot of people are missing. Hey everyone, I'm Jade Lee-Duffy and I'm a full-time realtor here in North County, San Diego. And what I love doing about this channel is cutting through all the noise of the housing market and breaking down what's actually happening on the local level. Because if you're paying attention to the headlines right now, it's probably really confusing. So let's look at what the numbers are actually telling us, starting with the bigger picture across California. Okay, let's dive in. So there's a report that came out recently that crunched all the data from the last 3 years and compared it to the Great Recession and what happened during those 3 years between 2007, 2008, and 2009. And honestly, the results kind of shocked me. So this report was highlighted in the San Diego Union Tribune in this article, California home buying falls below Great Recession lows. But what's really interesting is that it says California's home buying collapse is far different from the nation's sales dip. It says that there are less home sales now in the last 3 years than there were during the Great Recession. California had 954,423 sales in 2023 to 25, down from 1.25 million in 2007 and 2009. So there are actually less homes being sold in the last few years than there were in the Great Recession, around 300,000 less homes in California. So home buying was 24% slower over the past 3 years than during the housing nightmare. Yes, there are far fewer buyers these days than during the big crash. So on the surface, this sounds pretty alarming, right? This should be a huge red flag, but here's where context really matters. But back during the crash, the reason why the market was collapsing was because of foreclosures. There were way too many homes on the market and not enough buyers. But today, it's the complete opposite that's happened. We have very few homes, and this means really low inventory. And because there's not enough supply to meet demand, prices have managed to stay pretty strong. And the median home price in California right now is $710,000. So that's pretty close to the record high that we've ever seen. So it's not like the market is collapsing. It's actually that people can't afford to buy the homes that are on the market right now. So let's talk about what's squeezing buyers right now, because that's where it gets interesting. So mortgage rates have been very volatile lately. So right now, mortgage rates are hovering around 6.09% for the 30-year fixed rate mortgage. And here you can see on the graph right now, as of March 9th, is hovering at 6.12%. So that has gone up recently. From 2 weeks ago, it was 5.99, so just below 6%. But as you can see, it has been slowly trending down. A year ago, it was 7.16%. So they have been trending down, and the high point was in October of 2023 when it was close to almost 8%, 7.91%. So even though mortgage rates have been going down lately, prices are still staying high. So think about what this has meant for buyers. They were getting hit from both sides, from high prices and high mortgage rates. So it's been kind of like a 1-2 punch in the wallet. And because of this double whammy, homeowners and prospective buyers haven't been able to qualify to purchase a new home. In fact, right now, only 30% of Californians can afford to buy a starter home. But if you put this into perspective, during the Great Recession, 49% were able to qualify to buy a home. Also coming from the San Diego Union Tribune, another article, it says California starter home affordability nears 4-year high. The article starts, a California house hunter's chances to qualify to buy an entry-level home haven't been this good since early 2003. So it goes on to say the math shows that in 2025, fourth quarter, 33% of Golden Staters would qualify for a $739,000 house with an income of $140,000. Whereas before, in 2003, 47% average were able to afford to buy a home in 2003. So that was much higher over 20 years ago as opposed to now, where it is about 33%. So in today's slowdown, it's not about a bubble bursting or the market collapsing. It's really about affordability and pricing a huge chunk of the buyers out of the market. So in the San Diego housing market, it's actually been relatively stable when you compare that to the rest of the country. The median home price right now is $1.04 million. And here's where it really gets interesting. Home prices have barely moved in the last few months. And you would think in the winter thaw going up until the spring market that home prices are going to go up just a little bit, and they have barely moved at all. So back in December, the median home price was $1 million. And now in January, it has up $30,000 to $1,030,000. And then last month, it's gone up just a tiny bit to $1,040,000. So instead of seeing these big upswings, what we're basically seeing is just a very slow sideways track. And that's actually a pretty typical pattern when the market is adjusting to high interest rates. It's not crashing, it's not booming, it's just kind of recalibrating. So every home and neighborhood behaves a little bit differently in this market. So if you're curious what your home would sell for in today's market, don't hesitate to reach out. My number is right here on the screen, and I could just run a really quick market analysis and also show you what the other homes in the neighborhood have been selling for. So let's talk about inventory, because this is really where the heart of the matter is. So San Diego right now has about 2.1 months of supply. So in a balanced market where buyers and sellers have equal power, there is generally around 5 months of supply. And right now we're only at 2.1. So we're running at less than half of what we need for a balanced market. So what's even more interesting is that inventory is 25% lower than it was last year. And with mortgage rates slowly ticking down, you might be wondering, why aren't more people putting their house on the market? And you've probably heard of the lock-in effect. So economists are saying that most homeowners, they have a mortgage interest rate that is 3% or even lower than that. And they're locked in to this mortgage rate and they don't want to let go. So today's rates are closer to 6%. So basically, if you sell your home and buy a new one and have to finance that, it's going to cost you double. And for a lot of people, it just doesn't make sense to move. So that's what's keeping a lot of inventory off the market. And now, even though inventory is still pretty tight, days on market, it is taking longer to sell a home. Right now in San Diego, it's taking around 35 to 40 days to go pending. And that's a pretty big change from when during that pandemic, it just took a few days and you would get multiple offers. I remember those days. I had a house that hit the market and within a few days, we had over 20 offers. And today's buyers, they have a lot more time and leverage. There aren't that many buyers out there, so they are taking their time. They're able to negotiate more. Speaking of negotiating, let's talk about what's happening in home prices in San Diego. So right now, homes are selling for about 98 to 97% off the list price. Or inversely, buyers are able to shave off 2 to 3% off the list price. Now, that might not sound like a huge discount, but during the pandemic years, many buyers, to seal the deal, they were having to spend 5, 10, 15% over asking price. And also back then, during the pandemic boom, they were waiving inspections, they were waiving appraisals. They were doing everything they could just to get their offer accepted. But the thing to keep in mind is that even though buyers have more negotiating power right now with limited inventory, home prices are not having severe price cuts or not declining in a very significant way. So the market isn't crashing. It's not plummeting, it's just kind of normalizing. Actually feels more like a traditional housing market before pre-pandemic. So mortgage rates really could change the game. And while it hasn't been a huge change from last year, which was more in the high sixes, mid sixes, mentally, there is a shift if it is hovering around 6% or even lower than 6%. And depending on your credit score and how much down payment you are going to make, this can make a big difference in how much house you can afford. And economic data is saying that the mortgage rates actually, if they go even 1% lower than they are right now, it's said that a 1% drop in mortgage rates could give you 10% more in purchasing power. So if you are thinking about buying a home for $800,000, then you would get an extra $80,000, so it would be $880,000 more in purchasing power if mortgage rates go down by 1%. Or if it's $1 million home, you would be able to afford a $1.1 million home. So this is a significant difference. So to end this video, in California, home sales have slowed dramatically, but it's because affordability is way down. And what we're seeing right here in San Diego is that home prices are holding steady. They're not crashing. They're not going up like crazy. They're just stabilizing. And inventory is still extremely low, which is keeping home prices from falling. And home sales are taking longer to sell, between 35 and 40 days on average. And buyers have slightly more negotiating power than they did before. So the market isn't falling apart or anything like that, but it's also not a wild frenzy like we saw a few years ago. It's slowly shifting into a more balanced, healthy market where buyers and sellers can actually plan and think things through. So if you have any questions about your specific situation and neighborhood, don't hesitate to reach out. My number is right here on the screen, and I would love to hear from you. And if you found any value in this video, please hit the like button, consider subscribing. And if you like this video, watch this one.